Timber giant Samling Group is said to be eyeing a possible dual listing of its automotive business in Kuala Lumpur and Singapore later this year. According to Bloomberg, the exercise could raise more than 1 billion ringgit. It adds that the share sale could include Samling's domestic car dealership division, as well as operations under Starchase, a luxury auto distributor. A source told Bloomberg that Starchase is backed by the group's controlling Yao family. However, deliberations are still at an early stage, and the news agency says Samling may choose to list the business in only one stock market. Samling runs dealerships in Hong Kong and mainland China, selling brands include Porsche, Aston Martin and Volvo. In Malaysia, Samling sells Bentley, Mitsubishi and Honda vehicles and provides after-sales services for those marques. The Tun Razak Exchange or TRX is expected to be Malaysia's most successful commercial development this year. UK real estate advisory firm Savills, which believes that 2018 will be significant for the Malaysian property market, has named the upcoming financial district as its #1 property pick. Its other picks are properties adjacent to the MRT system, logistics-related industrial projects, and retail properties. Savills notes that TRX has achieved remarkable growth in terms of market acceptance and speed of development. It says the project is on track to be the most successful master plan commercial development ever. It also believes that the site will redefine KL's Golden Triangle and become Malaysia's undisputed financial hub. TRX has attracted an array of international and domestic institutions, including HSBC, Prudential, Affin, Indonesia's Mulia, and Australia's Lendlease. Menara Prudential is slated for completion at the end of 2018, the Affin HQ and Mulia's Exchange 106 to follow in 2019, while HSBC's HQ should be completed by 2020. AmBank Research expects Malaysia's equity market to stay strong in 2018. That's with the support of a strong deals flow, healthy economic growth, and recovering ringgit and commodity prices. Its head of research and chief economist Anthony Das says several significant IPOs are on the cards this year, including the listings of Bank Islam, Edra Global Energy, and potentially foreign insurers in Malaysia. He says capital is expected to be raised through equity placements and rights issues as the equity market continues to gain momentum, and that growth will come strongly from the mid-corporate segment. Das believes any adverse noises from the upcoming general election will be temporary. Meanwhile, the Malaysian debt market will also remain positive, given the various funding requirements for infrastructure projects that are due to be rolled out. Das is looking at corporate bond issuance, standing at around 90 billion to 100 billion ringgit. South Korean car-sharing startup Sokka will be launching its services in Malaysia in about 3 weeks' time, in its first venture abroad. According to South Korean media reports, the company will start with an initial 240 vehicles and 120 car-sharing spots called Sokka Zones. It plans to eventually expand its car offerings and number of Sokka Zones, as well as offer long-term rental service. Sokka reportedly said that there is high growth potential for car-sharing in Malaysia, where car-sharing is a rather unfamiliar service. And like South Korea, the population density in Malaysia is very high. It also cites similarities between Kuala Lumpur and Seoul in terms of the number of vehicles and traffic. Sokka established a JV in Malaysia with its second largest shareholder SK Corp last year. Users can rent cars by the hour via its smartphone app after paying a registration fee of 50 ringgit. Insurance coverage is included. Plantation outfit TDM has accepted some 4,500 hectares of land offered to it by the Terengganu state government, boosting its total land bank in the state to 47,830 hectares. The lands in question are Hutan Simpan Sungai Nipah and Hutan Simpan Rasau. TDM says that the move was in line with its domestic plantation expansion plan. The lands are alienated to TDM by way of grant from the state to support its ops and expenditures for FY17. One of the conditions is that TDM would have to pay 250 ringgit per hectare per annum to a trust fund for wildlife conservation and conflict management. It says the effects of the grant is still at a premature stage, and it is currently in the process of examining and assessing the impact to its net assets, earnings and gearing for FY18. However, it is expected to contribute positively to its future earnings.